Now, Mark, are you happy with this figure? Better than expected.
Yeah, but it's temporary. I think the first-time homebuyer tax credit is having an effect. And the other thing is the president's loan modification plan that's slowing down foreclosure sales temporarily. So we're going to get into next year. Foreclosure sales are going to pick up. And even if we get an extension of the first-time homebuyer tax credit, I think prices will start declining again.
The issue, obviously, on the economy overall, how much does housing make up of the U.S. economy? We know the consumer numbers, more than 2/3. Housing is that one area where many say has been the most volatile. So if you're trying to determine what's happening in terms of the overall consumer picture, it has been that housing story overall.
Yeah, it really has. And Mark, let me bring you in here and put on your forecaster hat for us. Bankrate.com says the average rate for the 30-year mortgage now going back up to 5.25%. Are we going to see a four-handle anymore? Because that would actually be a drag on housing, obviously.
Well, I think mortgage rates probably will rise early next year because the other thing that's helping the housing market is the Federal Reserve's purchases of Fannie Mae and Freddie Mac securities, which they'll complete their commitment in those purchases by next March. And if they don't expand that, and right now it doesn't look like they will, then mortgage rates will rise. In fact, the Federal Reserve's efforts have probably lowered the conforming loan rate by almost a percentage point. So mortgage rates will rise early next year as well.
So, Mark, if mortgage rates are going to rise, if foreclosures may start to come back into the markets and the home buyer's tax credit goes away, what happens to prices? What happens to this index? You say it can't last. Do we see another significant decline in prices, or do we just float along the bottom?
No, I think they're going to fall again. I think we'll fall another 5 to 10% next spring and summer. So this is a temporary respite in pricing. They're going to continue to decline.
How does that affect, then, housing overall in terms of home sales and contribution to GDP?
Well, I think home sales and housing construction, they're pretty close to bottom. I mean, they're at incredibly low levels, and I don't think they're going to fall measurably. The sales will, if the tax credit isn't extended, then home sales will weaken a bit, but we'll see more foreclosure sales, and so overall sales will be okay. But with declining prices, nothing really works that well in the economy. It's a corrosive on household wealth, and therefore the willingness and ability of consumers to spend. And of course, I don't think any bank is going to extend credit, at least not normally, until house prices stop falling. So these price declines suggest that the economic recovery more broadly will remain tentative well into next year.
All right. Thank you very much, Mark. Thanks to Mark Zandi, the chief economist for Moody's Economy.com, live from his offices in Westchester, Pennsylvania.